All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We have about 8 minutes till we have to make decisions here for the challenge, but there's nothing even really close to signaling today. I thought Honeywell might, but it's not. I'll run it again here in about 7 minutes just to verify. And obviously a few things could change. But as things sit, there are there are no new signals on the board. So gonna run with that here for now. Again, I'll double check here in about 7 minutes, and if that changes, we'll go and react accordingly. Now, with the trades that are on the board, neither Bank of America nor American Airlines is at its time stop. Neither are at their profit level or their stop level. So going to continue to run with both. Very easy decision, not a lot to it there. The price on American Airlines right now is $218, so I'll update that. Nothing too crazy there. And the price on Bank of America is 198. So Bank of America is sitting at 198. So that puts the challenge just over $10,000 in gains with the 1,500 that we've added here this week to the challenge. I know it's been a slow week in terms of trades. Really we made a trade yesterday morning, a trade yesterday afternoon, and that's it for the week. Okay, we'll stack on a little bit going into the weekend is definitely nice. But neither trade's finished, so we're not really kind of counting them or counting our chickens before they hatch here. These both trades are still ongoing, and obviously anything could happen here with them. Okay, but here's a nice spot to sit with 10,000 in gains. Brings the challenge value just over 1,300 or 13,000. But we did remove the initial 3,000 that we put into the challenge, so we are just running with gains. We aren't running with any of that initial 3,000. All right, so that's the challenge here. Again, kind of a slow week, in terms of traded triggers. We have had 4 triggers come in this week, and again, I'm looking for 3 to 5 a week. That's what I want to see come in. So, yeah, I guess this week is well within that 3 to 5. It's right there at 4, but couldn't trade FedEx, couldn't trade Walgreens with the earnings and the way the options were priced. And if you look at both of them, the options they didn't pay. They just didn't pay, and that's going to that element there is just one of the reasons why I'm not willing to take that risk until we have 10,000 in gains, and we're sitting there. So Bank of America, we're going to report earnings on Monday. I'd hold it. But, again, that's not going to happen. In fact, chances are very good that we'll be out of American and out of Bank of America before they do report earnings here in July. But there's a chance we could still be in with how things, run. All right. Seems like the most popular question for Jeff today has been, what do you think is going to happen with the G20? What do you think is going to happen this weekend? And look, I know what's been said out there. I know what's going on, and what's happening. But it's one of those things where, look, whenever you go into the weekend with an event such as this, you have to look at it a little bit from the side of a roulette wheel, right? It's all right. Do you want your money on red or black? Spin the wheel. We'll see. But it's not even that simple, because you can have different outcomes and then different results to those outcomes. You may get what is seemingly a bearish talk, and hey, you know what? China and the U.S. hate each other now, and they're going to start lobbing bombs, and the markets could go up. Not likely, but we've seen stranger. Maybe not that strange. But we could have a deal done. Everything's finalized, done, inked, and the markets open up down on Monday. Those are possible. Those scenarios are in place. So to sit there and go, well, you know what, U.S. President Trump and Chinese premier, this is what they're going to do, and now this is how the markets are going to act, it is kind of a silly game. To me, is a media game, not a trader game, right? Trader, it's risk-reward exposure. Where do you want your risk? Where do you want your reward? Or how do you have your reward structured? And how much exposure do you want going into it? Because on Monday, on Tuesday, you're going to hear people chirping, hey, you know what? I was right. See, I knew this would happen. I told you this was going to happen, right? It'll be all over the media. It will be all over there, and it will make, traders who were more conservative going into it or didn't take the gamble feel, oh, man, maybe I should have, right? But should have on Monday after the event, what's the point of that, right? It's just nonsensical. So I don't get too caught up in it all. I just don't see the value there. But whenever we do have a major event like this, I do like to go into understanding the sentiments of the market. Is the market going into this event overly bullish, overly bearish, just right? Because typically when the market goes into an event like this pretty neutral, there's not a huge move afterwards. When it goes in overly bearish, the outcome tends to be bullish, meaning you tend to see money come into the markets. When the market goes into an event like this overly bullish, you tend to see money come out of the market after the event. And so for me, that's what I want to see. It's not that I can say, oh, well, the market's overly bearish, so it's got to go up, or the market's overly bullish, so it's got to go down. So, mortgage the house, let's go. No, that doesn't make any sense, right? But if we can understand where the market is positioned, we can kind of understand the path of least resistance when it comes down to it. Now, last week we talked a lot about the sentiments of the market and how the market was up there hitting some new highs, right? The S&P hit new high last week, and the market sentiment was some of the more bearish sentiment that we've seen all year. It's very easy and very popular to get bearish right now. You've seen a few earnings. It's easy to pick those earnings apart and talk about the bearish side of earnings. We've seen some economic data that's very easy to pick apart and talk about the bearish side of the data. Very easy to play the fear card as far as geopolitics, right? The Iranian situation, the U.S.-China situation, even Brexit, with what's going on there. Very easy to play the fear card. The wall of worry is very high. And what's really interesting is normally when a market is sitting near highs, the wall of worry is pretty low. Market's not too worried about stuff. It's just, hey, this is great, this is grand, this is wonderful, let's go, right? And then all of a sudden they get something to worry about. It's like, ooh, ouch, okay, right? But we have a market that's sitting up. It's going to close near all-time highs, for the week, okay? Yeah, a little bit off of the highs. But it's going to close near all-time highs. What would you expect sentiments to be? I mean, sentiments, they're normally pretty bullish in the markets at these levels. I mean, right here, sentiments were very bullish. Right here, sentiments were very bullish. Sentiments bullish here in March. Sentiments bullish here in April. Well, let's go take a look. I'll just use one. I mean, we could go look at a variety of sentiment indicators, and they'll all show us about the same thing, just little different metrics. But let's go to the AAII, American Association of Individual Investors. This is with the week ending 6/26, so 2 days ago. Bullish. People bullish on the market, almost 30%. The historical average is 38.5%. It only went up 0.1% this week. Significantly less or fewer people are bullish in this market, even though it's sitting at a new high, than what the average is. And normally when the market's sitting at a new high, the number of people bullish is up here, 45, 48%. And it's at 29%, almost 30%. Neutral. Historical average is 31, with 38% neutral. bearish historical average is 30.5. 32.1. There's more of a bearish sentiment in this market today than the average. And that is with us sitting at near all-time highs. The neutral camp is pretty large, well above the historical average. And the bullish camp is very small, well below the historical average. We're going into this event this weekend with a market tilted on the bearish sentiment side, with the price action being very different. We haven't seen that very often. We don't see it very much. There are a few cases that kind of come to mind, in my mind with it. But it is something where if I'm going to take a risk going into the weekend, if I'm going to take that gamble, what side has a better chance of unwinding? Do we have a better chance of bears going to bulls or bulls going to bears? Right? It's pretty clear. There's a greater chance of bears going bullish, right? If something positive. Now, if it's, if something happens, if it's the worst kind of scenario, sure, the bears going to be proven right. We're going to see even more bullish people go bearish, right? That could happen. But when you look at how the market's tilted, it's less prepared for positive news than it is for negative news. Most times, you want to play the side of the big move. You want to be on the side that the market is least prepared for. And the market's least prepared for the upside. It doesn't mean the market's going to go up, but it means I go into the weekend and I say, look, the possibility of going up or the magnitude at which the market could go up from here is actually greater than the magnitude the market could fall from here. And we don't see that very often going into events. And that's my take on it. That's how I look at it. And bottom line, if I'm going to go buy anything today because of the weekend and for it, I have to look at it as a gamble. I haven't bought anything for that, but I will likely buy some FXI into the close. I'm not sure what I'm going to buy on it yet or what options, but I'll likely buy some FXI options into the close here and, call that my gamble, right? That'll be but some of my long-term positions, am I going to touch them going in? No. Right? I'm not highly exposed or overexposed. I have protection on a few things. I may add protection on a few other things, but chances are slim. There's no reason for me to add too much protection, here. So, it's just one of those. That's how I'm looking at it. I know there are a million other different ways that you can look at it and talk about it. And ultimately, we're going to hear on Monday the I told you so's, the I told you so's, right? But, it's just because there are people out there calling for every side. But when you look at the sentiments, suggest that if there's a positive outcome, the upside could be greater than what the downside will be if there's a negative outcome, right? And look, we've talked about the incentives for China and the U.S. by those in power. It is Jerome Powell and the Fed's incentive to push this market higher. The Fed actually risks losing autonomy if they do not push the markets higher. Which the Fed's never been in that situation before. Never been in that situation. Will they fight for their autonomy? Yeah, probably. But they can keep their autonomy a little bit more by pushing the markets higher. And you might be able to say, hey, is that autonomy? Not really, right? But they're one of the big players. U.S. President Trump, Chinese premier. What are their incentives? Their incentives are to push the market higher. Both of them need markets higher, but for both sides, they don't need it to happen right here, right now. If there's a pullback, they're still fine. They could come to the table in 2 months and make a deal, push the markets back to new highs. So while, yes, the incentives for the key players in this market are to drive the market higher, The only one with kind of immediate incentive and immediate urgency is the Fed. U.S. President, Chinese Premier, there's not an immediacy to the, this weekend. Just isn't there, right? President Trump, yes, he needs the market to be higher to help with the election. Market's sitting near all-time highs. Okay, fine. There's a pullback. It's like there was a pullback in May. Did that hurt him politically? In fact, you can argue that the pullback in May, bounce back in June, has actually helped him politically and actually has, strengthened some of the position in which he is, right? But, again, some of that comes down to politics. But when you look at the incentives are to drive things higher. The sentiments are bearish. And, what tends to win out, right? In the short run, anything can happen. But in the longer run, market's going higher. Data's bad. Data's eroding. But, we're still going to see these markets ultimately track higher and a new high set in. And it may be after a move to 280 on the SPY. But, it's ultimately what the incentives are dictating right here, right now in the markets. Okay. So anyway, that's my take on it all, and kind of how I'm looking at it, and or maybe more importantly, how I'm not looking at it. And again, none of those thoughts, none of those sentiments have anything to do with the challenge and the challenge execution. There is nothing in the challenge or the challenge execution that says, hey, when the U.S. president and when the Chinese premier meet, we do X, Y, and Z. It's just pretty ludicrous, right? So, we run it with the probabilities, we run it with the signals, and yes, I do know. I absolutely know that I could wake up Monday morning and Bank of America could be down $1 and American Airlines could be down $1. And you know what? If it happens, we'll pop out. Challenge will still have some nice gains, and the challenge will still continue, and on with the next signal and go. Those types of things are going to happen with any sort of automated system, and it's not a big deal, right? If the market goes up on Monday, great. Trades will work. We'll have some more gains, and all right, the trades will ultimately close out. And you know what we'll do? We'll trade the next signals and go. And either way, we'll be in a good spot to carry on forward. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourselves a fantastic weekend, and we'll talk to you Monday morning. Take care.